Hello, everyone, and welcome to eBacon's webinar, AB889 Made Simple, Fringe Compliance and Annualization Rules Contractors Must Understand. My name is Shauna Coronado, and I'll be your host for today's session. Now, before we dive in, let me introduce Jack Biltis. Jack is the founder and president of eBacon, bringing over 20 years of experience in payroll, insurance, and administrative services. Now, our agenda today is covering the basics of AB 889 and current changes, easy tips on annualization, and best practices to make your life easier. And you feel free to drop your questions in the chat box at any time. And please ask all the questions that you have. We'll answer them during the Q&A segment at the end. And let's get started. So without further ado, Jack, the floor is yours.
Appreciate it. Hey, everybody. I noticed that we have a couple people on the call that aren't even in California, so wanted to cover specifically California's Assembly Bill 889 that got passed, that's effective January 1st, but also talk about annualization a little bit more in general for those people that aren't specifically affected by California and are kind of confused on how annualization works in general, because that's basically what the bill is. The bill just requires some things to be annualized that weren't annualized before. All right, so real quick, we can talk about what 889 is. As I mentioned, it's effective January of 2026. We're going to get into exactly how annualization works and do a math example for you. We're going to talk about really the heart of 889, which is just the new things that need to be annualized, and then get into best practices and talk about a little bit how we might be able to help you guys in the future. So 889. I'm going to get into annualization in the next slide, but basically this thing called annualization, California just passed a rule that said pretty much a couple things that weren't subject to annualization before are now subject to annualization. I'll get into specifically what those are in the next slide or a couple slides over. It's actually, a lot of people have been worried about this bill because there's a lot of unknowns to it, but there's really minor changes, and it's going to affect you guys in a very small way. The big issue is that it gets rid of any exemptions from annualization that the DIR, Department of Industrial Relations, had passed prior to January of 2026. And the only things that are exempt going forward from annualization are pension contributions and training contributions to the CAC. So I'll talk about what that means right now. Okay, so what's actually changing? I just mentioned it. If any of you guys are using an apprenticeship council like ABC or AGC or WECA, your apprentices, you're paying training fees on your apprentices. That's not changing. Those don't have to be annualized because you weren't. You're currently paying a contribution on both your prevailing hours and your private hours. So there's no change there. But to the extent that you have to also pay training on behalf of your journeyman, and you're making those contributions to ABC or AGC or WECA, then that has to be annualized. And we'll walk through what that means in a bit. And one big distinction, if you're making contributions for your journeyman and you're sending it to the California Apprenticeship Council, the CAC, then that does not have to be annualized. They put an exemption in the law there. A big thing that did change, though, is if any of you are using a company for supplemental unemployment benefits, and that would be like PWCA of Ohio or Newbridge or a couple other companies that do that use supplemental unemployment benefits to fulfill your fringe training, your fringe requirements. That is subject to annualization, and that is a huge change that could cost you, $10-15 an hour. So that's something that you're definitely going to need to address. And if anybody is using supplemental unemployment benefits right now, I would definitely recommend you chat to us, and we'll talk to you about that, because the change to the journeyman training is very minor. It might cost you 50 cents an hour, half a dot, like 25 cents, 50 cents an hour, not a huge number. The change for supplemental unemployment benefits is huge. It's going to cost, $10, $15, $20 an hour.
Jack, we are going to answer a lot of questions at the end, but Candace just asked, we use ACTA for our apprentice program. Does this include them too?
Yes. Yeah. Anybody, we listed the popular names, for lack of a better word, but any apprenticeship program that you use outside of sending the money to the CAC would be, for your journeyman, would be subject to annualization going forward. Okay, and I'll cover that in a little bit in a second. So, all right, what is annualization? I mentioned that about 27 times in the last slide. So a lot of you people are probably saying, all right, that's great. What the heck is annualization? Well, annualization is basically a way for the government to reduce the amount of credit you can take on the benefits you provide your employees. And let's walk through an example. Health insurance is typically used as the kind of standard example for annualization. So health insurance is a general benefit that you offer your employees that's not specifically related to the prevailing work they're doing. You whether they were doing prevailing work or private work, you're offering the same health insurance generally. Let's call it $400 a month. You're paying $400 a month for your employees, and it really isn't affected by how much prevailing or private work they're doing. It's a general benefit. So the way annualization works is you figure out how much that would be in a year. So $400 a month times 12 is $4,800 a year. Then you divide it by the number of hours the employees work. As a standard rule, 2,080 is used for almost all employees. If you have reason to believe your employees are always going to work significantly more than 2080 or significantly less, you can use that number. But kind of as a standard candle, everybody uses 2,080, which is 40 hours times 52 weeks. That's how you get to 2080. So 4,800 divided by 2080 comes out to $2.30 an hour. So that becomes, for your health insurance, that becomes the allowed fringe credit. Now, if an employee was doing 100% prevailing, then that $2.30 an hour times, close to 2,080 hours over the course of the year, that would get you back to getting that full credit for every penny you're putting in and paying for his health insurance. On the other hand, employees that are working, let's say 50% prevailing, they're working 20 hours a week prevailing, 20 hours a week private, whether it's split up in a week or split up over the course of the year, it doesn't really make a difference. But over a period of time, let's say about half of their time is prevailing. Well, then you're going to be multiplying that flat $2.30 by half the hours that you were doing in the last example. So you're getting half the credit. So you're effectively applying that 230 towards both your prevailing and your non-prevailing. Whatever you apply to your non-prevailing is irrelevant. You don't take credit on prevailing because you're not paying fringes on non-prevailing work, on private work. So that's kind of the mechanism that if an employee is working 10% prevailing, you're effectively, instead of getting credit for $400 a month, you're effectively getting credit for $40 a month because you come up with that standard number and you're only getting to multiply it by the hours that are prevailing. So that's kind of that example that we included, and we're happy to give you guys a copy of this. But that example just walks through. In this example, someone's working 1,300 prevailing hours out of the year, which is about 63%. So the way the math works is they're going to get about 63% of the benefit of the credit of their health insurance. So $253 out of the $400 a month. So the big change with AB889 is saying, okay, now that you understand the math of this, and everyone's been doing it like that for health insurance, well, now you got to do the same thing for your journeyman your journeyman training. So if you're paying $1 an hour for a journeyman, and it comes out to, let's say he's working 25% of the year is prevailing, then that $1 an hour is going to be about, $250, because he works about 2,000 hours a year, 25% prevailing, so 250 hours, that $1 an hour is $250, and then you divide that by 2080, you get about 25 cents, and then that's your credit. Even though you're paying $1 for him, you're only getting 25 cents credit because he's only working 25% of the time prevailing. And there's a couple ways to actually do that math. We typically do it based on whatever he got paid the prior month or whatever got done the prior month. but there's a few different ways to actually make that math work. All right, so next slide. All right, so now that everyone's an expert in in annualization, we wanted to walk you through, here's what does not need to be annualized, and here's what now needs to be annualized. So what doesn't need to be annualized, so for those of you that are clients of eBacon, we have a trust, and typically once we calculate the credit for someone's health insurance and their PTO and their 401k match and their training, and our system does all that stuff automatically. Once it does all those calculations for each individual employee based on their particular PTO and everything else, the remainder, a lot of clients are putting that money into, are just paying that as cash to the employees, adding it to their wages. And then that's then subject to FICA and Medicare and workers' comp. And so you're paying an extra, on average, about 13% on top of that. That's a lot of money. That adds up to about $3-4 an hour, and that could definitely make your jobs unbiddable. So the eBacon Pension Trust, if you sign up for that, the employee, once we calculate whatever credits you're rightfully due based on your health insurance, PTO, and all those things, we will take the difference. So let's say you have a $20 requirement in California for a certain class, and we calculate that you have a $3 credit based on, for an individual employee, based on all those different things. We say, okay, the other $17 an hour, instead of making it wages subject to taxes and workers' comp, we put it in the trust, and the employees can still take it out anytime. They can have it come out every single week, so they just get 2 direct deposits instead of 1. But because it's going through the trust, they get, it's not subject to taxes and workers' comp. So you save that $3-4 an hour, and the employee saves money, you save money, everybody's happy. Or the employees can leave it into long-term retirement, or they have a lot of different options that we can go through. But all those different options, the pension option, the instant cash option, saving it for their kids' college or first-time home purchases, all those things are with us, not subject to annualization and not subject to the taxes, which is, main thing you want to, the main benefit, main thing you want to focus on. So there's also, for instance, eBacon, and I'm using us as an example. There's other companies, I'm sure, that have some of these type of programs. We also have an unreimbursed medical, dependent care, and parking transit. Those are also not subject to annualization. So whatever gets put in, you get dollar for dollar credit. Any ABC, AGC, WECA, or other plans like health or apprentice training, where you're paying on both the private and the prevailing jobs, so you're paying on all hours worked for the employee, that's also not subject to annualization. Anything that's any fully vested pension contribution. So if you're taking that $17 an hour and putting it into a 401k plan and doing all the testing and all that stuff, while the employees might not be able to access that cash until they retire, as long as you make it instantly vested and instantly eligible, that's also not subject to annualization. Any union contributions. So if you're on a PLA job or you're a partial union shop, those are exempt from annualization too. And then finally, as I mentioned before, any journeyman training contributions that you have to make in California that are where the money is going to the California Apprenticeship Council is also by law exempt from annualization. Okay, so most things are exempt from annualization. That's great. So what is this law actually changing? What is now subject to annualization? Well, again, I mentioned one of our things. Now the eBacon personal insurance, we have an option where employees can take some of their Fringe and pay for any outside health insurance. That's subject to annualization, but it's only, employees only put in $1 or $2 an hour, so it's a minor adjustment. Any generalized benefits, nothing's changing there. Health insurance, 401k match, PTO, same math I walked through before. Those were subject to annualization, and they continue to be subject to annualization. So the only things that are now newly subject to annualization is the supplemental unemployment benefits and the journeyman training, if you're only contributing those journeyman training on your prevailing hours and not your private, which is how 99% of people are doing. So journeyman training, again, not that big a deal. If you're giving your money to ABC or whatever, and it comes up to $1 an hour. Okay, if a guy's working 50% of the time prevailing, you're going to get a haircut. You're only going to get 50-cent credit instead of the full dollar. That's not all the money in the world. It's a reduction of 50 cents an hour. It's annoying, but it's livable. The other item, though, like the supplemental insurance, well, that's harder because that's where you were putting in your whole remainder, your $17 an hour, and to have that have a haircut of 50 or 20 or 75%, that that's $10 an hour. That's just a crazy high number. So if you are using supplemental unemployment benefits right now, that's definitely, hit us up in the chat. We'll talk to you about that, because that you just won't be able to run your business with that. One thing I do also want to address is all this stuff for AB889 only applies to California jobs that are subject to California state prevailing rules that are being managed or funded by the state or by municipality. If it's a Davis-Bacon federal job purely and not subject to the state, then it's not, you have a military job or something like that, not subject to California 889. Our system automatically calculates all those things for you. If it's a job outside of California, not subject to 889. A lot of people ask, well, what if it's a job that got awarded 2 years ago and it's just not quite finished? Well, as of January, it is subject to 889. Doesn't matter when the job's awarded. As of January of 2026, any jobs for California are subject to 889. Okay. All right, so that's the kind of bulk of everything. A lot of information in there, and again, send us. We'll give you our email address at the end. Send us any questions you have, and we'll obviously do as much Q&A today as you'd like. But it's not that big a deal, 889, and we're definitely here to help people through any questions they have. Best practices: capture time tracking, and get all your documentation, because they did increase the documentation requirement. We don't know if they're going to actually do anything about that, but you definitely, if you're not using an electronic timekeeping system, to make sure that you know what hours are prevailing, what hours are not, and that the employee signed off on them, you're setting yourself up for a world of hurt. You really got to look at an electronic system and keep good records. Again, not to plug us, but we do that automatically as part of our system. So other companies do that as well. So all these best practices are things where if you found another company that can do them, fantastic. There's plenty of good companies out there, but these are all things that we just automate for you. Use a Fringe trust rather than including Fringe on payroll. Absolutely. I mean, you're just wasting money if you're currently paying that $17 an hour as wages. You're paying taxes and comp on that, and you're just not being competitive with union shops or any other shops that are using that are using a trust. And that's just a very simple change that helps your employees, and save you $3-4 an hour on your job. Ideally, remit fringes in the same time period. That just helps you with your GC stay in compliance. You have pretty much once a quarter to submit some of these contributions, but best practice is you want to try to submit them as quickly with payroll as possible. Use a funded PTO plan. So this is not directly related to 889, but the DOL has just passed, or not in the last year or so, has passed guidelines that basically say that they're going to make it harder for you to take credit for your vacation PTO. They have what they call a funded plan versus an unfunded plan. Most normal companies have what's called an unfunded plan, where you have a program set up for PTO. If an employee, the employees can accrue it when they request time off, you give it to them, but that money is sitting in your account until they make their request. That's called an unfunded plan, and the DOL said you cannot get credit for unfunded plans anymore unless you get prior approval from the Department of Labor, which takes 8 months to do, and it's bureaucracy. So it's a way for them to really limit your ability to do that. The way around that is to create what's called a funded plan, where you take your PTO liability, put it into another company, and have them administer it. And again, not to plug us, but we do that automatically as part of our system. But that's just a way for you to take credit for your vacation and sick going forward. And that comes out to, $1 or $2 an hour. That can be significant dollars. Anybody, by the way, not taking credit for benefits they're providing, you're just wasting money. You're making your jobs less biddable if you don't take credit for the health insurance, PTO, vacation, 401k match, training, all those things that you're providing employees. And then just kind of repeat, store all documentation. Make sure that if it ever comes to an audit, that you can press a button and print everything out and make that audit go away. And again, not to plug us too much, but that's just something we've had a lot of clients with, have an audit situation. And typically in our audits, the client ends up getting more money back because if we're going to go through the labor of an audit with the DIR or some other government entity, we're going to push for things that weren't pushed for originally. And in many of those audits, we actually not only the client passes with flying colors, they end up being able to get an additional check back. All right, so now to plug us, since I've kept on saying the last thing, I'm shamelessly not plugging us before. Now I'm going to shamelessly plug us. So what we do, our system is a full A to Z system, starting with time and attendance and ending with the CPR reports and the trust. So employees use our system, they punch into the time and attendance. We can use other time and attendance systems too if you're married to something like, to something with your ERP, but typically they use our time and attendance, they punch in, we keep track of the job and the task the employee is doing, we assign the appropriate rate based on the termination, we calculate all the fringe credits based on annualization and all the different things. We figure out how much an employee needs to get paid. We pay the employee for you. We do the W-2s, direct deposits, garnishments, all the tax filings, all the stuff. As soon as payroll's processed, as soon as you hit that post button, the system will generate all your CPRs, all your California A131s, your DIR uploads, your PRISM uploads, your LCP uploads, your federal WH-347s, your reports for all the different states. I think there's 20-something states that require them. We generate all those things. So we make life easy. Plus, we have a Fringe trust, so you can save money, and especially if you're paying money in wages right now. That kind of covers most of the things. I mentioned we have the trust, and then if you did get audited, we're there side by side with our attorneys and helping you through the whole process. So
fantastic.
Got through the whole thing. All right. So that being
said,
said,
great presentation. Great presentation, Jack. And so now that we're here at the Q&A, let's move on to a few questions. Now, we have questions in the chat we're going to answer, but we also have a list of pre-questions that were sent in by people who signed up. So I'm going to start there. And Lori asks, she says, the only credit we take against prevailing wages is annualized medical premiums. So I don't think this will impact us, but I want to be sure. Most of our projects are private.
Okay, so there's a couple things in there. If most of your projects, to the extent that your projects are private, that doesn't, then there's no effect. This only affects your public, your prevailing jobs. But obviously, as you mentioned, you do have some prevailing jobs and you are taking credit for them, at least on the health insurance. You have to, by California law, on those, with the exception of very few classifications and very few determinations, by law, you have to pay the training fee that's listed in your California determinations. And that's usually for a journeyman, $1 to $2 an hour. And so that's just a requirement. So you are paying those right now, and you should be taking credit for those. If you choose to pay them and not take any credit, that's your choice, but there's no economic reason to do that. So I assume you're at least paying them, because otherwise you'd be subject to a lot of liability there, and forwarding them to the CAC or whatever. If you're paying them and you don't do a lot of work, I assume you're probably just forwarding the money to CAC. If it's going to the CAC, then you can take full credit. You don't have to worry about annualization. There's a couple of sub questions in there that I'd like to know a little bit more information. So definitely reach out to us and we can talk to you about your
Lori, reach back out to us at the end. We'll show you an email where you can send in a question. Alicia says, if we pay the same union fringes for all hours worked, then there's no annualization, correct? And there are no exemptions. Which fringes have to be annualized?
Well, if you're a union shop or you're subject to PLA and you're paying the union for that, then those are exempt from annualization. So whatever you pay to the union, you just take dollar for dollar credit for, if you're paying $6 an hour for the health insurance, which is probably more like $12 an hour, because those unions got to make money, then you're going to get $12 an hour of credit, and you don't have to worry about annualization.
Okay.
If this would just be for any non-union work.
Mm-hmm. Candace has a question. If you pay the Fringe out in cash as part of their hourly pay and do not take the credit, do you still have to pay training benefits to your training program on all private projects as well as public projects?
Short answer is yes. So on public projects, you absolutely need to pay training, regardless of whether the remainder goes in cash or a trust or whatever. There's a specific requirement in California that the training charge, both for the journeyman and the apprentice, gets paid to either an apprentice fund or to the CAC for any prevailing work, regardless of what happens to the remaining money. The second part of the question is, do you have to pay it on the private work? Well, if you're with an apprentice, if you're with an apprenticeship committee like ABC or whatever, then yes, their rules are you'd pay it on both the public and private work. If you're not with an apprenticeship program and you're just sending the money to the CAC, then you would typically just do that on the prevailing jobs and not the private jobs, and then it wouldn't be subject to annualization.
Understood. Now we have another question from Liz. Is there a program enabling me to prepare my own payroll with the new form? I only need a couple a week. So I think that would be eBacon, right?
Yeah, I mean, we could definitely help you. If you do we have two different product levels. One for companies that do a very little amount of prevailing and don't need, a lot of handholding, and another one for clients that need a little bit more white glove treatment. So we could talk to you about either option. But if you just needed your CPR generated, yeah, there's online versions of them. If you need to upload, like to submit to the DIR, then yeah, you can go online to the DIR website and submit it manually. You can, if you're just literally trying to generate your CPRs and your XML upload or your DIR upload, you can do that through, there's fillable PDFs and there's online stuff. If your question is more, how do I do all the calculations? How do I figure out what the right numbers are? Then that's where you'd want to use a company like us, because we do all the work and all the calculations for you.
Wonderful. Now, Michelle wants to know, can you provide a sample of how to annualize fringes based on 2025 prevailing wage fringe contributions for an employee? And specifically, how do you go about getting apprentice rates? Do we use the California apprentice provided wages, or do we calculate using the 208 apprentice wage formula Excel sheet?
So it depends on your situation. So as far as giving you a example, so we walked through an example on the health insurance. I kind of orally gave an example on how the journeyman would work. When I was talking about $1 an hour, where the guy was only working 25% prevailing, but just to kind of reiterate that example, to how the math actually works is you'd say, okay, it's $1 an hour, and let's say you're using consistently last month's contributions as your metric. You can use last month's, last 6 months, whatever, but let's say you chose last month as the easiest way to do it. You'd look at what you actually contributed in the last month. You'd multiply that by 12 for each individual employee. You'd multiply that by 12. Then you divide it by 2080, unless there's a better number to use. That would give you your hourly rate, your hourly credit for the subsequent month, and you'd use that as your credit rate for training for your journeyman, for that journeyman, the entire month, and then you'd recalculate the following month. If you did it monthly, you could choose your time period, but most people are using prior month. So that's the first question on kind of using the math example. As far as where to get the rates from, there are it really depends on your situation. If you're with ABC or AGC or whatever, they're typically going to have you use the DIR published determination rates for both your journeyman and your apprentice, but then they'll have a certain minimum that they'll say, okay, whatever the DIR determination says, but not less than $1.40 an hour. And then for your private work, that becomes a little bit trickier. You have to, for your apprentices at least, you have to use the latest determination for that county that you're working, even though that job that you're working is not a prevailing. So you'd even for private work, you'd figure out what determination you would be using if that was a public job. So that's kind of the way most people do it. But if you're on a PLA, you're using a union, they're going to give you the rates. The DIR does publish both journeyman and apprentice prevailing rates. Sometimes you have to call in for that. We do all that all the time. We download and maintain all those rates in our system automatically. So when you start a job, you pick based on the date. It tells you what determination to use, and then you're done. But for clients that don't have a database that manages all that, sometimes you have to call the DIR. Sometimes you have to search for it a little bit. As far as the using the spreadsheet, typically that's more used for if there's no answer, or if you're doing a federal job where like an apprentice 2 is 78% of the journeyman rate, then you're going to multiply it out and use that. And so for federal jobs, that's what we do. But for state jobs, we actually use the published rates.
Very good. Sheena asks, can this trust with eBacon replace what is set up with Newbridge currently?
Absolutely. And that's the perfect example of where you definitely want to talk with us, because Newbridge is a fine company. And if you're doing business outside of the state of California, great. Anything you're doing within California, though, they've made that product just impossible for you, because supplemental employment benefits, you're getting, it's now subject to annualization. So it's a death knell on that product in California. So if in the example you have a $20 requirement, we calculate $3 of credits with all the benefits you're providing, and you have $17, you do not want to have that go into Newbridge going forward. In California, our program, if you take that $17, it goes in. The employees have a lot of choices what they can do with it, including taking the money, having immediate access to the funds, getting a direct deposit every week for it, and it's not subject to annualization. So that is definitely something you want to talk to our people, sooner rather than later. And I would say do not make any contributions in 2026 to Newbridge, because you're just wasting half that money, unfortunately. And it's not Newbridge's fault. It's the state screwed them over.
Candace wants to know, do you still have to pay training wages on private projects along with prevailing wage projects if you pay the fringe benefits out in cash on employee checks and do not take the fringe credit?
Yeah, that's similar to the question that somebody else asked. The answer is yeah. The training contribution happens before the remaining thing. So the training contribution in California by law has to be made, and let's call it $1 something an hour, or whatever. Each determination is different. That has to be made. It cannot be made to the employee, which is stupid, but that's just the law. It has to be made to an apprenticeship council or the CAC. If you make the payment to the CAC, then you get credit for it. It sucks because the employee doesn't. You're just losing the money. The employee doesn't get the money. You don't get the money. There's no benefit, but at least you get credit for it. And it's just the law requires it. I consider it extortion, but that's another story. If you have a relationship with an apprenticeship council where they're actually doing training for you, like ABC, they do a fantastic job. Then you would send the money to ABC, and you'd pay it on both apprentices and non-apprentice. Sorry, you'd pay it on apprentices on prevailing and non-prevailing. You'd pay it on your journeyman, generally just your prevailing, and then you would have to annualize it. But then once all that's done, then the remainder you can give to the employee in wages, which has a tax detriment to you, or you can do a trust like ours. But just to kind of big picture it, just because you give all the money to the employee currently in wages does not exempt you from this. You have to make a contribution for journeyman training, and it has to be either to the CAC or to another apprenticeship council. You cannot give that money to the employee, unfortunately.
Understood. Ali asked, if we are union signatory and report contributions to the union for all hours worked, even if they are different amounts for different projects, we do not need to annualize?
Correct.
Question?
Yeah.
Correct.
And someone asked a similar question before. Yeah. Any union contributions are not subject to annualization. You're fine there. I mean, you got a lot of other issues to deal with the union, but that at least annualization is not one of them.
There you go. Leslie wants to know if we pay training to CAC AB889, does not pertain to us, correct?
Yes, correct.
Okay, correct. Okay, we got that. Sheena asked another question. We currently have a sub fund of Newbridge. We will need to set up a call to review our options. Yeah, absolutely. Yep. And Sheena, we will provide you with a place where you can email at the end. We'll get you all set up. Danielle asks, so the only
and sorry, let me just, and I want to reiterate one thing. Usually contributions you make with Newbridge or PWCA or any of the other supplemental employment are typically made monthly. So all your January contributions are generally made in February. I would not make your January contributions in February. We can get you set up quickly, but anything you make in 2026, you're going to lose, half the credit or depending on what each employee works, prevailing or not.
Very good. Danielle asks, so the only fringes that are affected by this for our journeymen are health and welfare and training, ? We do not have to worry about pension?
So there's a couple of questions in there. So journeyman training, absolutely, that's the main thing that gets affected. Journeyman health and welfare, if you have a traditional health plan where you're providing $400 a month towards their health insurance, then that used to be subject to annualization and it's still subject to annualization. So you do have to worry about annualization, but that hasn't changed as a result of this law. You had to worry about it for the last 20 years. You still have to worry about it now. If your health and welfare is a hourly contribution that you're making for like ABC's health plan, and you're doing it on your journeyman, on your both public and private jobs, then you don't have to worry about it. But it's a rare situation, so I assume that that's not what you're talking about. But if you have any more specifics about your actual situation, email us and we'll tell you exactly in your situation what matters.
What applies? Great. The next question comes from
Jack.
I'm
sorry. And she mentioned pension also. If you're saying pension, if you're contributing an hourly amount of your prevailing work to a pension plan subject to immediate vesting, immediate eligibility, then that's not subject to annualization. But when you say pension, if what you mean is your 401k match, then that is subject to annualization. And again, send us stuff and we'll tell you exactly your deal.
Great. Back to Jack. We have another Jack, and he's asking, do you figure annualization annually or should it be done quarterly?
We typically do annualization monthly. And the best example is 401k match. Whatever you contributed last month times 12 divided by 2080, it comes up your rate for next month. If a client has a lot of variability and they would prefer the calculation to be quarterly or annually, we can do that as well. It's just an option in our system. The problem with doing anything too long, quarterly kind of okay, but the problem with that is the first couple months that employee's working for you, the number is 0. So if you do monthly, then okay, you lose the credit for the first month because you didn't have contributions in the month before. If you do quarterly, well, you're losing credit for almost the entire quarter. If you're doing annually, you're going to get a reduced credit for the entire first year he's being paid. So we generally recommend as close a number as possible. We can actually even do it by payroll, and as long as you don't mind your credit changing every payroll, that's financially the most advantageous option. So we can support a lot of options. Again, which option we'd recommend to you is dependent on your situation, and that's kind of a general guideline what I just said, but email us and we can definitely walk you through what makes sense.
Okay, I love the next question. Leslie asks, we're currently using Sure Payroll. Should we change over to you?
No, I recommend against it. Yeah, sure. All right, twist my arm. Yeah. So as a general rule, if you were a construction company, if you were a dentist office, I would say Sure Payroll is a great company. They can, you just need regular payroll. They can do a great job for you. If you're a construction company, even if you're not doing prevailing, then there's a lot of things that we offer for construction that just make life a lot easier in terms of job tracking and job budgeting and management, and keeping all your hours to the job, and a lot of different tools that we have as far as keeping your budget and everything to the job. Once you start adding prevailing, especially any kind of significant amount of prevailing work, or union jobs or whatever, then we really are almost the only game in town. There's other companies that do small pieces of what we do, and I'd always recommend talking with them as well. I'm happy to give you their names, but we're the only company that really does all these calculations from A to Z and has a trust and really keeps you out of trouble. So we definitely recommend talking with us and seeing if we're a good fit for you.
Wonderful. Lane wants to know, if we were a customer, would you do the uploading to the DIR for us?
We generate the DIR XML files. So once you process a payroll, you hit a button and it creates a folder for you that has all your PDFs and your uploads, including your XML uploads for the DIR. We don't physically do the upload to the DIR because when you upload it, you go into the DIR, you go to the website, you hit upload XML, you upload the file, and then it says certified. And you have to type your name and I hereby certify this information is accurate. So you have to still certify that it's real, but we do all the heavy lifting. We create the file that you're just uploading it and then going through and certifying it. So you don't have to type any new information. All the data is going into the system from us.
Awesome. Candace wants to know, are shop hours paid to employee not associated with any projects subject to AB889?
No, because shop hours are generally not considered prevailing. The only prevailing hours are, with some exception, I'm going to give you a short answer to a longer, that there should be a longer discussion, but the only hours that are subject to being paid prevailing are hours that you're physically on the site, on the job doing work, and in some cases travel to that job. Anything that you're doing from the office, fabricating, shop time, bidding, all those things, they're generally exempt from being paid prevailing, and therefore, if it's private work, it's 889 has nothing to do with it.
Kimberly wants to know, she said, I thought you were going to run through an example of the impact of this change. So can you do a before and after scenario? I was hoping for that.
Yeah, sure. So let's say I pay $1 an hour for my journeyman training, and a specific employee in the last over the course of the year, and we'll do it a yearly thing just because the math works the same. But usually we do this calculation usually monthly, but let's just do it yearly to make it easy on the math. So let's say, out of the 2,000 hours, I'm not going to say 2080, just to make the math easy. Out of the 2,000 hours the guy worked last year, 500 of them were prevailing and 1,500 were private. And private includes, PTO and all that stuff too. So before January, before 2026, that $1 an hour that I paid the employee that I paid for the employee's training, that wasn't going to the CAC, let's say it was going to ABC as an example, or AGC. That $1 an hour, when I would calculate my credit for any particular payroll, I would say, okay, well, if I have a $20 requirement, I would get $1 credit for that. I paid $1, I get $1 credit. I'm getting dollar for dollar credit, easy. So I know $19 left, and then health insurance and all that stuff. You can take those credits, and then and all those things get credit. So maybe $3 or $4 for health insurance and PTO. So between that $1 and another $4, that qualifies you for $5 of credit. And if your requirement was, let's say, $20 an hour minus 5, you'd owe $15 an hour of extra fringe, either into a trust or into his wages. Now, since the guy is only working 500 hours out of 1,500 out of 2,000 hours total, so 25%, the math works out that $1 contribution is only giving you a credit of 25 cents. So even though you're paying $1 to ABC, you can only use a 25 cents as your credit for purposes of that. So instead of a $5 total credit when you added the health insurance stuff, now your credit's only $4.25. So that just means more wages you have to pay the guy, or more that you have to put in the trust. And just to give you one more math example, in the real world, we're generally not doing this annually. We're doing this per month. So let's say the guy worked, out of 160 hours that you work in a month, a quarter of that, so 40 of those were prevailing and 120 were private. So you would say, okay, well, that $1 an hour times 40 is $40 divided by 160. So 40 divided by 160 is 25 cents. So in an example where they're roughly working the same amount, prevailing, non-prevailing every month, that 75% haircut that I walk through would be the same. So I just kind of wanted to show you how, whether you calculate on a monthly basis or an annual basis, the concept of the math is the same. Obviously, the exact numbers would be a little different.
Angela wants to know if eBacon can export to eComply.
Absolutely. We do that all the time. eComply, eMARS, LCP Tracker, Prism. If there's a system that, and we also, by the way, our payroll system also exports to about 35 different general ledger and ERP systems as well. So we don't like anybody double typing. So if there's a system that can accept the file, we definitely export the file for you, and we do eComply all the time. And that, I assume that means you have some HUD jobs because they're the main users of eComply.
Eric wants to know if a person works on projects with different training contribution rates during the year, how does this affect annualization?
So think of it last year where you just took credit for the actual contribution made on that payroll. For that classification, it was easy. Whatever you're paying on that specific job, you take that credit. So that's not the case anymore. Now it's just a generalized benefit. So, and again, this is just for training, for journeyman. You just take, as the example I gave before, you just take the total gross amount of training for that particular person, for that particular journeyman that you contributed in the last month, and you divide it by the hours worked in the last month, and you get a rate that you use for all your prevailing jobs for the following month, regardless of classification or determination or whatever. So it's a little bit of a pain in the butt. Our system just does it automatically. But think of it as you care now about the gross number, not the individual rate you're paying at any given time.
Amanda asks, I am paying our journeyman training contributions to ABC for public works projects only. Since I cannot take the full credit for training paid to the ABC, is the difference owed to the employee as wages?
The difference would be owed to the employee as additional fringe contributions. And if you're paying the excess, that $17 an hour that I keep on mentioning as wages, then yeah, instead of $17, you're going to now pay $17.75 an hour, depending on, which example we used. If that money is going into a trust, like our system, our trust, or a pension trust, then that would be just additional monies that would go into the pension trust. So since you said refer to it as wages, I'm assuming you're currently paying your excess as wages. And so the answer, I guess, would be yes. But I'd also definitely encourage you to email us, because if you're paying in wages, you're hurting your employee, you're hurting yourself, you're paying a lot of money in taxes and workers' comp that you just don't need to pay. So I definitely recommend we talk to you about the trust. And again, the employees still have access to the money. Why give Uncle Sam more money than you need to?
Ali asks, what do you think is the easiest way to ensure our subs are annualizing correctly and are not claiming more fringe than they should?
So that's a very good question we haven't got into. So every requirement in California and federally for prevailing wage and Davis-Bacon compliance falls not just on the subs, but on the GC, even if you don't really control the day-to-day movement of the subs. So you definitely have to not only be careful for you guys, you have to be careful for your subs. That being said, the best way to manage it is using a subcontractor submission system And again, I'm shameless plug. We actually have a subcontractor submission system. The most popular subcontractor submission system right out in the market right now is LCP Tracker. Our system works similar to LCP Tracker, it's just newer technology, and it allows you to do a lot more things and keep track a lot easier. But it basically allows your subs to do their payroll, submit it online. We make sure that all the rates are being paid properly, the annualization is being done correctly, and then it goes to you for a quick review and for you to approve it. So you definitely, there's been situations, a lot of horror stories where GCs have had to pay millions of dollars of wage claims for mistakes their subs have made, and you don't want to find yourself in that situation. So we can definitely help you out there, and email us and we'll talk to you about that product as well.
Good. Maria asks, would you please let us know an email or phone number to contact if we have any questions? And that's sales@ebacon.com, correct, Jack?
That's it. Yeah.
That's it. Sales@ebacon.
Yeah, and we'll publish that. You can actually, why don't we switch to that, to the contact page, just so we can, so people can write it down. And there you go.
There we go. You got it.
Perfect. Okay. Yeah. So it's sales@ebacon.com. You'll get our salespeople that will, be happy to talk to you about any details. If you have any specific, more technical questions, they will bring one of our team in and walk through the specifics. And if it gets really a weird question, they might bring me. If not, they'll bring one of our many compliance people that we have at our office to help out and walk you through it. And everybody's situation is a little different, and we'll we want to make sure we understand your situation and give you the advice to help your employees, save you guys a lot of money, and make sure you stay in compliance.
Very good. Now, I understand that we're about to hit the 1 hour mark, but we're going to keep going because these questions are great and Jack is wonderful. So we're just going to answer as much as we can. Kathy's asking, if paying directly to CAC, we can take the training portion of the Fringe as a reduction, or do we have to include the amount in the hourly wage to the employee?
No, the first answer, if you're paying it to the CAC, then it's not subject to annualization. So you're just taking credit for whatever specific contributions you're making, for those punches, for that job. And that number is a credit. And even if it was annualized, it would still be a credit. It'd just be less of a credit. So if you're doing CAC, you're going to take full credit for that contribution, and that reduces the remaining amount that you have to contribute. So if you're getting $1 credit and you have a $20 requirement, well, now there's only $19 left that you have to either add to wages or put into a trust.
Monica wants to know, is there an additional step or adjustment at the end of the year that our accountants have to do to complete?
I mean, I can answer that a lot of different ways, not specifically related to annualization. Annualization should be, done monthly, or done on a constant period, whatever you determine your period to be. It's never a bad thing to do an annual review to make sure that your assumptions and your calculations were reasonable. As an example, if you put 2,080 hours as a denominator for a guy, and he worked 3,000 hours because he worked just a heck of a lot of overtime and he's always working that, then you might want to look at it and say, okay, 2080 is probably not a reasonable number. I should change, his reoccurring denominator of hours worked. So those are things that you want to calculate, and we look at those automatically. You just want to make sure you're in good faith compliance with them. So if you're doing like 2,080 hours and the guy this year works 2,200 hours or 1,900 hours, nobody cares about that. If he's working significantly different than 2,080 hours, those are the kinds of things you want to address.
Our friend Tristan, hi Tristan, he's an eBacon guy who uses our eBacon already. He wants to know, do we automatically get credits if we pay directly to CAC, and what report shows the credits?
So if you're set up to have the money go to CAC or anybody, that just affects whether you annualize or not. But In your situation where it's going CAC, we generate a couple things. Your fringe benefit statement that we generate automatically will show you how much is going to training and how much is remainder, and how much is being credited for health insurance and all that stuff. So that'll give you a big picture view of how your credits have been calculated. That's also something that you're going to want to send to your GC when you start a new job. Every payroll you process, it's going to generate your certified payroll report, which is going to have the hourly credits calculated for that specific payroll. So that's another way that you see your credit. And then whether you're giving the money to CAC or to ABC or somebody else, we generate a payment coupon for you at the end of the month to cut that check and send it to the CAC. So it'll be the CAC, I forget what the form's called, but it'll be the payment coupon saying, here's how much we've collected and here's how much we're sending off to you. So we do the heavy lifting for you there as well. Same thing with ABC and the other ones. We give you your remittance report, so you just write the check and you're done.
Okay, I have a check on this one. I'm not sure if we've covered the next question or not, so we're going to give it a try.
Sure.
Michelle asks, if an employee works both prevailing wage and private projects, do we need to pay the fringes on both prevailing wage and private? We send training and health fringe contributions to ABC and AGC. Does that mean that we do not need to annualize these fringes? What about pension?
All right. Yeah. So a lot of good questions there. So
okay.
The first thing is, so if you're doing to both ABC and AGC, that means that to me that you have multiple classifications that are some classifications covered by ABC, some by AGC. The amount that you're contributing to your apprentices, I assume both AGC and ABC require you pay it on both your prevailing and your private work. So since you're contributing on both prevailing and private, then your apprentice training contributions are not subject to annualization. Right now, your journeyman contributions are generally only paid to prevailing jobs, although ABC and AGC are recommending that people contribute to both to eliminate the problem, although that's costing you a whole bunch of money. It's costing you $10 to save $7, so I don't necessarily think it's the wisest economic thing to do. But assuming you're not paying your journeyman training, you're paying to ABC and AGC just on your prevailing and not on your private, then yes, that would be subject to annualization. And then your pension contributions, if you're talking about an employer match on a 401k, that is subject to annualization. If you're talking about a direct contribution to your pension for your prevailing hours of the remainder or of an hourly rate, that is not subject to annualization. And then, Shauna, can you reread the question? I think there was one more piece in there.
Yes. If an employee works both prevailing wage and private projects, do we need to pay the fringes on both prevailing wage and private? We send training and health fringe contributions to ABC and AGC. Does that mean that we do not need to annualize these fringes? What about pension?
Okay, yeah, so I knocked them all out. The only thing I just wanted to clarify is the question of, do we need to send journeyman training to ABC and AGC on private work? That is something that historically most companies have not done. And unless AGC or ABC say, hey, that's the new rule, they're requiring it, then no, you don't have to do that. And if they do say that they're requiring it, that's a conversation and that's a negotiation. And I don't think, personally, I think they're recommending that you do that. And, it helps them, they get more money. But I don't think they're going to force that for market reasons, because I don't think they want to scare their members off of their apprenticeship stuff. So I think they're going to recommend it, but my guess is they're not going to force anyone to do it. And if they do force you to do it, that's a conversation, we could talk to you about what might make sense.
Very good. Candace wants to know, did you say earlier that Davis-Bacon only projects with no state funding are not subject to AB889?
Correct.
Correct. Good.
And I'm glad that I could answer that in one word. Beautiful.
Yeah, that was an easy peasy one. Scott wants to know, he says, we currently pay training to the AGC for prevailing wage projects only. AGC is now requiring us to pay the training contributions on all non-prevailing wage projects. How can we track the hours for each non-prevailing wage job in eBacon to pay the training?
Okay, so first thing, there's two questions there. The fact that they're requiring you to do that, that requirement may just be a strong recommendation sounding like a requirement. So we did the math yesterday, and it costs you more to pay money on your non-prevailing. It'll cost you more to do that than just to take the haircut on the annualization. You're better off economically to not pay it on private for your journeyman, and to just annualize. I can walk you through the math examples, but you're saving money by, regardless of what percent prevailing you do, you're saving money by not paying for money on your non-prevailing, your private jobs for journeyman. Now, if they absolutely say, nope, we don't care, we're making you do that, I would negotiate with them a little bit, make sure that they're really, really, really making you do that, and then it's worth it, because I think they don't want to, I don't think they want to scare off their members by that. Now, if they still make you do it, then you either choose to do that or you don't, or you choose to leave AGC or not. Now, having all that set aside, and if you're in a situation where, it's just less hassle, you're just going to do it, then no problem. You just, in our system, we just flip a switch. We start charging. We would start charging your training on your private work as well. We would automatically calculate what rate it needs to be based on what county that job is in, and we would charge the appropriate amount, and we'd add that to your AGC remittance payment, and then we would not annualize it because you're paying both on private and non-private. So two answers there. One, I don't know that you really need to do that, but so I kind of reject the premise. But if you absolutely at the end of the day need to pay AGC on private work, then we can do that, no problem.
All right. Allie says, do you offer any of your services as standalones, or do we need to sign up for a whole package?
We definitely offer standalone. The trust is a standalone product. The payroll and CPR stuff, those kind of go hand in hand, but together they're standalone. We have a lot of clients that use, like, for instance, our time and attendance, but we have a lot of clients that don't use their time and attendance, and we just import a file to do payroll. So you can, there's at least 4 different decisions when you come on with us on what pieces you want. Plus, even on our main payroll system, there's a top tier level and a cheaper level. So you can kind of mix and match depending on what makes sense for you. Now, we obviously recommend that you use us for more things, and all those pieces work well together, but we're not going to sell you anything that you don't need.
Very good. Sheena asked that. Okay, we're taking a step back in time. Remember the time tracking question? She has a question about that question, which is, how does this work when you have an apprentice and a JM? Shouldn't the apprentice time match the JM's time? Otherwise, the apprentice gets paid the same as a JM.
Yes, that's a true statement. That's not specifically affected by AB889, but there's a journeyman on duty requirement that when you have an apprentice working on a job for that specific classification, you need a journeyman there as well to learn underneath and be supervised by the journeyman. If the journeyman isn't there on a particular day, then that apprentice should be paid the full journeyman rate, because they're effectively acting as their own journeyman. So it obviously costs you a lot of money if the journeyman's not there. That's called the journeyman on duty requirement, and our system automatically tracks for that and will warn you if you have a situation where you don't have a journeyman on a job, or if you're not meeting the 1-to-5 ratio of apprentices to the journeyman, or any of those things, so you can make adjustments and not end up wasting money on things you don't want to pay for.
Okay, I think you might have answered this, but Angela asks, on the private jobs we pay the JM training to ABC. Does this meet the requirements?
Yep. If you're already paying the journeyman training on private jobs to ABC, then there's no annualization required.
Okay. Oh my goodness. I think we're on our last question here. So fabulous. You did so good, Jack. So
Great
Lydia, yeah, they are. They've been really good. So Lydia uses ABC. She wants us to know that. And she says, I just wanted to clarify the Michelle question. If we don't pay fringes on private work for journeymen, we are subject to annualization. If so, could you further explain this?
Yeah, I think I kind of walk through the math before, but just in case there's a gap still, and since the last question, I might as well filibuster a little bit. If so, you're on the journeyman, you're paying your main contribution to ABC, and you're paying it just on your prevailing work, not on your private work, which is kind of the normal way most people have been doing it. Then each individual employee is going to have their own calculation, and you're going to take a period of time, and we take the most common is we do is the prior month, but you can do prior quarter, prior year. You can do current payroll, which is probably the most economical way to do it. It saves you the most money, but your credit's going to change every single payroll, and you might not want to have to give your if your GC requires a new fringe benefit statement every time, then you might not want to do that. But again, we'll advise you on what the best time period for you is. But having said that, so let's say you paid for Bob, you paid $500, or no, let's say you paid $1 an hour times 40 hours last month, and you're doing a last month calculation. That's the one that made most sense for you. You would say, okay, you paid him, he worked 40 prevailing hours at $1 an hour, that's $40, and he worked 160 hours in total. So he worked 120 non-prevailing or private and 40 prevailing. So he worked 40 out of 160. So $40 divided by 160 is 25 cents. So for the following month, your credit you're going to use for Bob is 25 cents for his training. That's it. I mean, you paid $1 in the prior month, but you only paid on 25% of the jobs. So the next month, your credit that you calculate is 25 cents. And by the way, this math, it seems clear to me because I've gone through it so many times in prepping the new programming. But even our developers and our compliance people struggled with the move from it being a specific dollar amount to being just a generalized number that gets divided by a denominator. So I get that it's confusing, and the nice thing is our system just does it for you, calculates it for you. You don't have to think about it. But we'll definitely walk you through and justify the math so you are very comfortable how it works. And same thing, by the way, if you ever have a GC that questions any of the stuff, we spend a lot of time talking with GCs and explaining to them, here's how it's calculated. And they go, great, thanks. We're releasing the check because everything that eBacon made sense.
Very, very good. Okay, Jack, that was a wonderful webinar. We covered so many topics in relationship to AB889. And I want to encourage everyone, there's a button right here. You can see it says, curious about how we can automate AB889 for you. You can click on that button and it will take you to a place where you can sign up so that you can have a walkthrough of our product and really connect. But first, I want to take you back a slide to talk about what we're doing next month. We're having another webinar, and it's a panel discussion this time. So there will be some amazing people from KPA, Brown & Brown, and eBacon. We're all coming together to have a discussion how safety programs and payroll records reduce workers' comp costs. So if you'd like to attend, you can click the link in the chat, and you'll see our amazing helper, Michaela O'Leary. Thank you, Michaela, for all your help during the webinar. She put up a link for you, so you can just click that baby and sign up right away. And then, of course, thank you all for joining us today. We hope that you found the session really helpful. We're going to be sending out the recording for your reference, so you will definitely get that. And if you like what you heard today, click that button below to schedule a meeting with us. And just as a reminder, if you're an existing client, no need to click that button. Just contact your customer service representative and they can help you. Okay, everyone, thanks again. And we hope to see you at the next webinar. Thanks, Jack.
Thank you, guys.